If you want to build steady, reliable passive income from the Philippine stock market, dividend investing remains one of the most powerful strategies available. It's a method focused not on predicting market swings, but on owning quality businesses that pay you to wait. And here's the twist. The Philippine Stock Exchange has barely moved in more than a decade. Prices are flat, volatility is high, and the economy is filled with uncertainty. This environment punishes speculation, but it rewards discipline. So, if there is a perfect time to focus on stable, cash-generating dividend stocks, it is right now. But here is the big question most investors get wrong. How do you diversify a dividend portfolio properly? It's not just about owning a few different stocks. It's about intelligent construction. How do you combine different dividend stocks so that your income is stable, your downside is limited, and you are not dangerously exposed to the fate of just one sector? This is where a clear process becomes your greatest asset. And here's the exciting part. If you stay until the end of this video, I will reveal the complete recommended portfolio composition. We're not just talking theory. I'll give you a full sample allocation across 10 specific dividend stocks. You'll see the exact percentages you can apply whether you are investing 100,000, 1 million, or even 10 million pesos, giving you a practical blueprint to start building your own dividend machine. Let us talk about why diversification matters. While it's tempting to bet big on a single sure thing, dividend investing only works long-term if your income remains consistent and predictable. The problem is, not all dividend stocks behave the same. Some industries face predictable economic cycles, while others get hit by sudden regulation. Some business models simply slow down for years, unable to adapt. If you put most of your money in just one company or one industry, your entire dividend flow becomes vulnerable to a single point of failure. That is why diversification is an essential part of your process. It allows one sector to carry the portfolio when another is weak, smoothing out your returns. The best dividend investors don't just chase the highest yield. That's a rookie mistake. Instead, they control their process by building a portfolio of reliable dividend payers across different industries, ensuring no single event can derail their financial goals. Let us start with Meralco. It is one of the most stable dividend stocks in the country. People and businesses need electricity regardless of the economy. This makes Meralco one of the most defensive positions in any dividend portfolio. The dividends are consistent, payouts are regular, and demand is predictable. Next is Aboitiz Power. It gives you exposure to the growing power generation sector. Over the next decade, the Philippines needs more energy capacity. Aboitiz Power is positioned to benefit from that expansion. Dividend payouts may fluctuate with earnings, but historically, they have offered very solid yields. Together with Meralco, you now have an energy mix that balances stability and growth. Let us move to the REITs, starting with AREIT. Among the real estate investment trusts, AREIT stands out due to its portfolio of high-quality commercial properties and its strong sponsor, Ayala Land. This backing provides a robust pipeline for future growth and expert management. While construction and residential real estate were hit over the past years, the income-producing office segment has remained far more stable. AREIT's income is secured by long-term leases with high-quality tenants, and its occupancy rates remain consistently strong. This reliable cash flow makes it a compelling defensive dividend choice for income-focused investors. Then we have RCR. Robinson's Commercial gives you exposure to a wide set of office assets with strong anchor tenants. RCR usually provides higher yields compared to many other stocks because of its strong cash flow profile. The dividends are distributed quarterly, giving you consistent passive income across the year. Next is Citicorp, a very unique real estate investment trust because it is backed by renewable energy assets. Instead of office towers, it gets rental income from solar and energy operators. Because of the structure of its leases, Citicorp often delivers one of the strongest dividend yields in the market. This adds diversification because you are mixing real estate with renewable energy. Next, let us go to telcos. PLDT is one of the highest paying dividend companies in the PSE. The telco business is mature, cash generating, and essential. Even with challenges, demand for connectivity continues to rise. The dividend yield is consistently strong, making PLDT a core stock for dividend investors. Then we have Globe Telecom, which offers a slightly different business mix compared to PLDT. While PLDT has more legacy assets, Globe is more focused on mobile data and digital services. Combining both telcos smoothens your risk while maintaining a strong dividend flow. People pay for data regardless of the economy, so telcos are highly defensive. Next is Metrobank, giving you exposure to the banking sector. Rising interest rates have boosted bank earnings, allowing them to distribute respectable dividends. Metrobank is conservative, high quality, and stable, making it a solid centerpiece in a diversified dividend portfolio. Then we have Puregold, representing consumer staples. People do not stop buying groceries during recessions or inflation. Puregold is one of the most resilient retailers in the Philippines and pays consistent dividends. This anchors your portfolio with a strong consumer play. Finally, DMCI. It is a conglomerate with exposure to mining, construction, utilities, and real estate. Because of its diversified sources of income, DMCI often produces high dividend payouts. It is more cyclical than other names, but when combined with the rest of the portfolio, it adds strong yield potential. If you look at the full list, you will notice something very important. This is not just a list of high dividend stocks. This is a combination of industries that react differently to the economy. Energy, telco, banking, real estate, consumer, and conglomerates. If one sector slows down, others continue generating cash. Now here's the part you have been waiting for. The final recommended diversified dividend portfolio using equal allocation. 10 stocks, 10% each. Whether you invest 100,000 pesos, 1 million pesos, or 10 million pesos, you simply divide it equally. Here is the complete list. Meralco and Aboitiz Power. That gives us our energy exposure. Ayala REIT, RCR, and Citycore. This gives us exposure to REITs, while the latter gives you exposure to rental income but also into the ever-growing space of renewables. Next, we have PLDT and Globe. These two round up our telcos and give us another predicatable sector that receives cash on a regular basis, while we have Metrobank that gives us exposure to the financial sector as well. Finally, to round up our 10 stocks, we have Puregold and DMCI. These two give us exposure to consumption and conglomerate. This gives you a balanced mix of stability, yield, diversification, and long-term sustainability. This is the kind of portfolio that can carry you through uncertainty while giving you consistent passive income. You can't control how the market will move, but you can control how you diversify and how you allocate your stocks. This is how you win and how you reach for your goals of financial freedom.